Alright, so here we're looking at a strong push from the lows, and this is the top of the range. This is value area high. We have a low volume node. On the big picture, we dropped all the way down here. We push higher here. Now we're testing 20 daily moving average, 21 EMA, starting to pull back. So I was looking at where to enter short. So we saw this in the footprint, this volume cluster come in after we kind of were losing momentum. How do I know we're losing momentum? Well, listening to the tick strike, looking at volatility turn, ticks start becoming negative, ADSPD starts turning down. I have this custom indicator that's going negative now. Deltas are starting to shift, the book starts getting negative. So all that together is telling me, okay, well, maybe we have a little bit of a pullback. So using this to lean on, I can put my stop up here, have a very tight stop, and then I can start looking for targets. Right? Well, I mean, target it should be the middle of the range or the VWAPs, right? Which already give us, you know, from here, if you enter here to here with a stop here, that's 1-to-1. Anything over that is better than 1-to-1 risk reward. So anything beyond that it's you know, even a 1-to-1, this is a high probability trade as you just saw, right? The only thing is that you gotta keep the context in mind, right? You can't just do a trade like this anywhere, right? Like, we are at the high of the day after spending a lot of, let me show it here, a lot of energy going from all the way from the bottom of the range, from value area low, big push, big push, big push, all the way to value area high. This is RTH value area high, and then we started turning. So now I went short at, let me see what price, 69.16, right, just a little bit below this. So now I'm just I have my stop up here. So now if I have more than one piece, I did a short because I was done for my day today, but I took a small position. But if I had more than one contract, I could take one off here, take one off at the high volume node if we keep moving lower, some here at this area of which is the point of control, and an area where we had a lot of order flow and volume that came in. So those areas are always good places to target. And if I get stopped, I get stopped. You know, it's a short, small risk trade. If you do 1 micro and you have, you know, 5 points, is $25 risk. So anyway, I just wanted to show that. Let's watch it play out. But now, you know, it looks like we're getting order a little more bullish order flow. We're getting back above this, so you don't have to stay on the trade. Once it hit the first target, if it starts turning, you can just get out if you think that it's gonna go the other way. And we're having a lot of bullish order flow again, so it wouldn't be a bad idea to just scratch that trade. So it would be you know, if the conditions that you enter upon, right, the conditions that you used to enter on the trade, they're not there anymore, it's okay to just close it and then reassess, right? So anyway, I just wanted to show that. even if this trade doesn't play out like a big, it doesn't run big, it's still a good example of how to use the footprint to enter at key points for reversals to look for good risk reward trades.